speaker of our session to deliver his speech. The presentation, and the presentation will be on mobile commerce, the upcoming frontiers for emerging marketing. Through it, I would like to call Mr. Sriram Raghunathan, Head of Mobile Commerce, Airtel India.
I'm very completed in surviving families. So good morning. I left last night at around 9 o'clock from India and reached Calcutta to get here. So I reached around 1 o'clock. Had to get up at 4 to catch this flight. So I was very keen that we present what we were doing to the regulators. Since that opportunity is not there, at a minimum I'll keep you entertaining so that I can salvage something from the session. I think some of the things that I'm going to say are going to contradict this very excellent presentation that Chai has made. Partly because I'm a banker, I spent 22 years in a bank. And so to that extent, it is not to be argumentative, but to some extent the views are different. Telcos and banks view this problem slightly differently, and it will help to understand the motivations of the respective sectors. And for that purpose, I'm going to raise some points. So first of all, I think the important thing to understand is, so what is the nature of the relationship between telcos and banks? And I'm deviating a little bit from my slide design. So if we were to say, like the question that Meena asked him, if we were to say that telcos and banks were to be equal partners, then sharing of course cannot give you prostate cancer. So we've got to examine what is the nature of the relationship that a telco and bank should have. And I think the answer is not a simple answer. There are two questions really in that question. There is a bank universe. All our three markets are actually same. India has 1.2 billion population. There are 750 million mobile connections. There are 200 million bank accounts. So we are significantly under-penetrated in banking, which is similar in Bangladesh, similar in Pakistan. We are significantly penetrated in mobile phone, which is the same in all three markets. In all three markets, the telcos see tremendous positive growth. Why? Because when the population will get exhausted, the SIM supply is not going to get exhausted. From person to machine, now all devices carry SIMs. So machine to machine is the new trend, and there is a significant. It's not a question of a person carrying two SIMs. It's not every device is going to carry a SIM. So as a telco, so the opportunity for growth in the base telecom business is pretty solid. If you see the next foreseeable 4-5 years, from moving from a voice telephony company to providing data services, to providing m-commerce and m-health, or variety of services, the telcos have a pretty rapid forward path. So, but there is a convergence area between banks and telcos on m-commerce. Right? Now, if you see the unbanked population, that's very large in all our economies. In the unbanked area, a telco has a critical role to play. In the banked area, the banks have a critical role to play. And I think there were 5 videos carried which I did not see. I do not know whether we covered that, but I think when you look, depending on which population you're looking at, the nature of the relationship between the bank and the telco will change. And to that extent will change what is the kind of commercial partnership, role and responsibility that we need to have. So just to make that metaphorical. So let's say there is a husband and a wife. So there are two kinds of relationships that a bank and a telco can have. I think metaphorically, it's between a husband and a wife or a husband and a maid. Not that we manage the maids, but just explaining. From a conceptual sense, if you're in a bank universe, there is a certain set of tasks that you expect the telco to do. But principally, banking with premium customers is providing, services which are banking products, which is not a telco business. And telcos are not interested in that business. Right? And then I think there is this set of activities that telcos have to do to facilitate, so it is not so different from internet banking or ATM banking or any other channels, where there is a role for the channel to play. Whereas if you go to financial inclusion, the other way to understand this logic is to take numbers. So let's take the top 1 million people in Bangladesh, and let's say they can save $100. So you've got 100 million, deposit pool. Then you take the bottom 100 million people, let's say they're going to save $1. You've got another $100 million pool. If you see the difference, so 20 years back, we were all discussing developed countries. Now we're discussing, economies like ours will be the future. The reason is the expectation is $1 per person into 100 billion is expected to grow much faster. So if you think next 5 years, so the $100 that somebody had today that maybe will become $150 or $200. But the $1 today is going to become $10 or $20. So there is no doubt that the pool which is in the base of the pyramid is going to grow rapidly, and that's why financial inclusion is actually good commercial sense. But for the commercial sense, if you have to do that business today, if you have to make a $1 deposit to make financial sense for a bank, make significant investments today. It's a huge challenge for any bank. So very few banks today are born with a very significant budget pool and saying, I'm going to go and invest $50 million and go and make this business of tomorrow come good. So most banks say, I don't have, like the first speaker spoke, I don't have anything to share. So you should partner. So this is where the optimism of m-commerce needs to be balanced with the reality of m-commerce. There is no doubt that m-commerce is going to be transformational in the next 5 years in all our economies. But there isn't money to be made. It's a social transformation, but we have to be, balanced about this thinking. There is pockets of money to be made. You are basically in certain pools, but I think the most important priority right now to solve is what would normally take us a 10-year break-even for base of the pyramid inclusion. How can you accelerate that to 3 years, and how can you make the investments today? Now, if you ask for a telco or an external payment systems partner to make these investments for you, at some stage they will have to come to it. So they will make the investments today because of the promise of tomorrow. If they don't come good, the bank sits with the risk. If you create 10 million accounts to a partner and say, I'm not going to pay you, you have an opportunity to partner with me, you can't do the business otherwise, you make the investment. If they don't come good and they were to vacate the space, as a bank, you still have to deal with these customers. And this is the reality that we saw in India. So just to summarize back, so in the last 4-5 years, financial inclusion, as you know, is a huge need in India and has been a very big priority for the government. The Indian government itself has been, in the last 6-7 years, sending every year about $40 billion to the end recipient under programs which are creating rural employment. So the challenge Indian government had was, when I want to send that money to the person in the rural area, my bank network doesn't allow me to reach them. The postal network doesn't allow me to reach them. So suddenly now the Indian government is putting pressure and saying, please create a payment system. In creating a payment system, somebody needs to deliver the last mile. That's where the economic situation came. So 30-40 million accounts got opened by banks. All banks say there are no balance in these accounts. You spend a significant amount of money. If you look at the telco side, let's take Airtel alone, we've got about 200 million customers, we've got about 1.6 million distribution points. We add 10 million accounts in a month. So the next month, for example, if I were to give these 10 million accounts to a bank and say, whatever it costs to open these accounts, please can you pay? I don't think there is a bank today which is able to backbone that. So, if you want to achieve financial inclusion, there needs to be a design for scale and for sustainability. So if the money moves from one pocket to the other pocket without a payback logic, it only postpones the problem. But it is a solvable problem. And I think it will get solved if there is a better appreciation of the role of a telco for the inclusion area. And if that does not get mixed up with the lack of a role of a telco in the included area. So the motivations of a telco and a bank are always going to be different. In the telco's case, we are interested in width. If you have 200 million people, I can only activate services that will make sense to a substantial portion of my customer base. So if it's going to make sense for 1 million people in the overall customer base, it's too expensive infrastructure for a telco to provide and maintain and ensure high quality service. It becomes a hobby. And inside a large company, hobbies die. If I had to therefore do something, I would do something which includes, of the 200 million people, likely 80% don't have a bank account, but they have financial needs. If I could provide that, so long as at the cost square, I am enriching the lives, which is basically Airtel's, vision for its own business as well. So how to introduce services? Then, payments compete with music, with games, with a whole bunch of content which is far more pervasive in the customer base. So it has to command a share of attention. If you think from a bank perspective, banks are not interested in the 100 million. Of course, they're interested in a directional sense. They're interested in upfront investment did not have to get made. If the government would make, which is a large part of the argument that India has had for 4-5 years, which is just recently changing now. If the government were to say the cost of financial inclusion we will bear, then there is a framework. But if if the bank had to choose today, it would kind of stay close to what can be made viable. So if accounts which had $100 were viable, they'd say, how do I cut costs by using mobile technology? and if I can cut sufficiently, maybe I'll start taking $50. And let's grow from there. Let's take small steps. So inclusion will become a 5-year, 10-year journey, and it may be a little bit of a challenge to still cover. We have had 200-year experience in banking in our markets. The extent of population that's being covered is not so extensive. So like you can get electricity and water. If you consider access to financial services, the basic need of people. If they have cash, all our economies are cash economies. If they have cash, cash cannot fly in distances. So if providing ability to use cash is a basic need of an individual, we need to have a design that can deliver that in a cost-economic way. So I will skip some slides to the presentation, so not to take more time. I just wanted to emphasize some points in this logic. So in terms of design, therefore, the difference between a developed country and developing country is very stark. If you are in a market like the US, there is 300 million people, 1 billion plastic. People don't need to be included. There is still some unincluded there, but that is by choice. It's not for lack of access. There are some people in the Midwest who live there and say, I'm happy with my cash. Right? But it's not because they don't have access to alternatives. So in markets like US, you don't need any new container of electronic value to be created. In all developing countries, there is no alternative. Physical distribution, so let's take India. India's got 80,000-90,000 bank branches. In a geography of that size, versus a telco which has 1.6 million retail outlets which are converting cash into electronic value, which is airtime now. If a separate container got created and saying you keep this cash in a different wallet and just use it as money, there is distribution already available today running at zero fraud because it's entirely prepaid. So there needs to be an alternative design to solve problems in developing economies. So what has worked, if you see globally, bank-led models have worked very well in developed countries. Bank-led models have worked very well in developing countries for the universe which is included. The universe which is not included, an M-Pesa model is, for example, the postal child. So let's just examine the M-Pesa example. In a 3-year time frame, in a country which has, say, maybe 30 million population, right? There is a 50-60% coverage of people simply by allowing a low value money transfer to happen on a mobile phone. 10% of the country's flows happen to that. The telco is not sitting with money. In either model, whether it's telco led or bank led, the money sits with the bank. Principally, what changes is whether individual customer accounts need to be created in the bank or not. I think the number of people in the banking sector, for example, I consider him to be a banking evangelist. I think the level of clarity that he's got about this business is extraordinary, and therefore I'm sure his bank will do well in the